Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seymour interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seymour.
Welcome everybody back to another episode of the Apartment Gurus, formerly the Apartment Guys podcast. We just added Chelsea Garber, who's not with us today, but she frequently co-hosts with me, and so we had to change the name from the Apartment Guys because Chelsea clearly is not a guy, and so we're rebranding the show right now. I'm really excited to have my friend Key Lee on the show today. Key is a fellow investor and a fellow syndicator, and does a lot of investing in the Columbus, Ohio market, which, as many of you know, many of the listeners will know from past episodes, that my team, Greenlight Equity Group, also invests in Columbus, Ohio. So that's how Key and I kind of met and got affiliated. And Key is his company is called Elevate. You can check Elevate out at elevaterei.com and get an idea for his company there and check it all out. So Key, I'm really excited to have you on the show. Thank you so much for joining me.
Thank you for having me. I'm excited to be here.
Yeah, you bet. So, first things first, just to give our listeners an idea kind of who Key is and, how your background and your real estate story, kind of how you got to where you are. If you wouldn't mind sharing with us a little bit about that, that would be awesome.
Yeah, so I'm an airline pilot. I've been in the airlines for the past 17 years. I'm a part-time airline pilot. I've also had some experience playing and coaching high-stakes poker, which is a pretty unique job. Now, I started investing back in 2007. I actually bought my first property right before the crash. I bought my house in Utah, out of all places, this place called Washington Terrace. And I remember as soon as I bought it, it just went down in value. And, it was a rough start with real estate investing. Mm. Now, that property actually made some money. I held on through the recession, and I felt like, hey, if I can make money with this property, I can make money with almost any property. So that got me into another triplex, this time in Chicago. I was living in Chicago at that time. I'm from Southern California in the Orange County area. Mm-hmm. And I'm a partner and co-founder of Elevate Real Estate Investments. And we're multifamily. We focus on multifamily value-add BNC assets, mostly in Columbus, Ohio. But we also have our footprint in Reno, Nevada, and Charlotte, North Carolina. And for a while, I just had single-family house and triplex. And I was at a point where I wanted to scale up in the business. And at that point, my idea of scaling up was, I'm going to sell these and buy a nice fourplex. So I wanted bigger pockets, started networking with people and say like, hey, where can I buy a great fourplex? And that's when I ran into a gentleman by the name of Mike Ely. And he's like, Key, why aren't you buying apartments? And I had to think for a second. I didn't even know that was an option. So I was like, well, I can't buy apartments. I don't have that kind of money. I can't qualify for that kind of loan. How do I manage it? And this guy just kind of talked me through why investing in an apartment was within my reach, why it was more possible than I thought. He said, listen, when you get a loan from the bank, they're not looking at your paycheck. They're looking at the property's ability to pay for the mortgage.
Yeah.
And I was like, oh, okay. And he's like, well, how do you manage your triplex right now? And I said, a property manager. And he asked, well, how do you think you manage a 30 unit or 50 unit property? It's through a property manager. It's when you leverage your skills that you can scale and do bigger things.
Right.
And that was a shift in mindset. I didn't even think that it was even an option until somebody showed me that it can be done. Mm-hmm. So to get started in apartments, for me, it was really a shift in mindset that got me started. And so he planted a seed in my mind. I started doing some research on my own. I read everything I can about apartment investing, listened to all the podcasts that I could, talked to a bunch of different people, and I realized, hey, maybe I can do this. So I talked to one of my good friends, Dan. We've been friends since childhood. He also had some real estate portfolio of his own, small single family house and duplex. And I told him about my plans. I was like, hey, listen, I'm going to sell my 3 units and I'm going to buy apartments in Columbus. Do you want to do this with me? And without skipping a beat, he's like, yeah, let's do it. I mean, Dan and I, we've been thinking about collaborating on a business of some sort. And when I brought up this idea, he loved it. And we never looked back since. There was a lot of learning. We had to, try out a bunch of different things, but it's been a great journey. We turned 5 units, sold it, and turned that into 60 units in Columbus, Ohio. And since then, we bought more properties in Reno, Nevada, Charlotte, North Carolina, and we're just expanding our portfolio every day.
Yeah, and I looked at your website, and your portfolio is really impressive. All the properties that you own and all the properties that you have exited. I'd encourage listeners to, again, go to elevaterei.com and check that out. So a couple questions for you. When did you buy the 60 unit in Columbus? Because that's like really breaking through. When did that happen?
So this was in the middle of the pandemic. This was in May 2020.
Yep.
We originally went into contract in January, and we're supposed to close in March, and that's when the shutdown happened.
And you've done, there's 13 properties in your portfolio that you both own and have exited. Is that all since 2020?
No. So part of the portfolio was prior to 2020. It was the, triplex, the duplex, some single family houses.
Okay.
There was some, office building in California. So some of it was prior to the 2020. A lot of it was past 2020.
Gotcha. So you've had a lot of success here in the last few years. I got to ask you, how did you had property in Utah, and you live in Orange County. You were living in Chicago. How did you pick Columbus, Ohio?
That's a good question, because I don't have any personal ties to Columbus, Ohio, but we were looking at markets outside of California, because California is a little tough to invest in, especially starting out, due to price per door, and the legal landscape is not really friendly for landlords. You can still invest in California, but you got to go in with your eyes wide open. It's just a different strategy. Yeah. So we're looking out of state, and we have some criteria that we look for when we enter a new market. First and foremost, the most important thing is population growth. Then we look at job growth, job diversity, supply and demand, median income, crime. And Columbus checked all the boxes. We liked the growth in population and jobs. We liked the job diversity. We liked the supply and demand situation. And it just checked all the boxes that we're looking for. And we felt very bullish about the future of the city.
I mean, the criteria that you just went through is really like textbook as far as market analysis goes. My friend Neil Bawa, the mad scientist of multifamily, he's a market analytics expert and talks a lot about population growth, job diversification, like you said, key to your point. And he loves Columbus, Ohio. And he teaches a class. I think it's called Market Magic or something like that. I'm sure I'm getting that wrong, but he uses Columbus, Ohio as one of his examples that he goes through and talks about being a very healthy market and talks about the whys and the hows of that. What I know about Columbus and why we invest there is basically what Keith said, that the economic and job diversification in Columbus is tremendous. You've got the state government, which is very large infrastructure there. You've got the Ohio State University, which is the third largest school in the country and has massive employment and economic impact in the market. And then you've got tech jobs, you've got a lot of logistics and shipping and stuff like that. You've got healthcare is a big thing in Columbus. There's some major hospitals there, and we love it for that reasons. And then in late January, Intel came along and announced their new microchip factory is going to be in a northeast suburb of Columbus. Going to create 10,000 new jobs, and it's going to be a $20 billion facility. And that to me is just like icing on the cake with Columbus. We've been there. We own 3 properties there, soon to be 5. And we already loved Columbus, but I mean, it's hard to even compare that Intel impact to really anything else, maybe a Tesla or something like that coming into a market, or Amazon. Are you excited about this Intel thing? What are your thoughts on it?
Yeah, I mean, it's a game changer for sure. And, we were in the market before the announcement. And when we heard it, we're just like, oh, I guess we picked okay.
I know. We felt the same way. We actually are closing on a property in New Albany next week. And New Albany is the submarket that it's near the Intel plant. We're about 9 miles from the Intel plant. And when you look at 10,000 new jobs, Columbus, those are going to be high paying tech jobs, support jobs, construction, et cetera. And Columbus just doesn't have the labor pool at this point to support that sort of instant expansion that's going to happen. Construction on this thing starts in October. And so there's going to be a lot of people either moving to Columbus permanently or temporarily. Mm-hmm. We anticipate the demand on our properties to be very healthy as a result moving forward. I'm sure you're seeing the same thing, Key.
Right. Yeah. I mean, the growth in Columbus has been just phenomenal, just the organic rent growth in the past few years.
No doubt. And population growth too. And, if you look at the Clevelands and Cincinnatis and Indianapolises and Detroits and Pittsburghs and Louisvilles, like those are the surrounding urban market, metro markets. And Indy's doing pretty well, but Cleveland and Cincinnati, Cleveland's, losing population. Mm-hmm. Cincinnati's kind of flat. And you've got this in the middle of it, you've got Columbus, which is really, really hot. Like people are moving there left and right. People love living there. It's got a hype and kind of a sexiness about it. People are just excited about the food scene and the sports scene and the recreation scene. It's an easy place to live, right? There's very little traffic. You can kind of get wherever you need to be in 15, 20 minutes, no matter where you are in the city. And there, it's just, it's like you alluded to crime earlier. It's relatively healthy as far as low crime goes. And so these are all things for the listeners, no matter if it's, where it is, Columbus or elsewhere. These are the things to be thinking about and looking for: your population growth, your job diversification. Prices of single family houses are something that I watch pretty closely, because that tells you what kind of immigration might be going on, and also, the amount of capital and income in the market that supports single family houses. And as you know, Key, the single family scene in Columbus has just been crazy as well, as far as, median house price and days on market. Like something will come up and sell within 3 days, and with, double digit offers on the table. And so yeah, I think we're both feeling obviously good about where we are. And the other nice thing about Columbus, and I'll get off my long-winded tirade about Columbus, but that's because of the job market and job diversification. And so there's this general idea that Columbus withstands shock. And that's really talking more about the economy than anything else.
And we saw that through the pandemic. We were in contract for 2 properties, and the shutdown happened, and we weren't sure, how things will turn out. And our broker's like, okay, let's extend the contract for a couple more months, see how the pandemic shakes out. And we realized there was really no pause in, rental activity or rental collection. So that gave us confidence to go ahead and close on the properties. But as you mentioned, it did very well, through the pandemic and other downturns. And I think Columbus also has a lower cost of living compared to the national average. Yeah. And that's one of the things that makes it a very lucrative place to live.
Yeah. Well said. So, and you have properties elsewhere as well. Are you continuing to look in other markets, or are you pretty focused on Columbus?
We have our footprint in Reno, Nevada, and Charlotte, North Carolina, but our primary focus is in Columbus. I mean, we love those other markets as well, but I think we have the best team in Columbus as far as the network of our brokers, lenders, property managers, contractors, and we have the ability to scale the best in Columbus, even though it's 2,000 miles away from home. We're very trusting and confident of the people, our partners that have boots on the ground. Yeah.
So I was actually going to ask you about boots on the ground presence, because you and I are in the same boat where, our companies are based in the West. I'm in Salt Lake City and you're in Orange County. Do you bring in to your deals boots on the ground partners, or do you just leverage property management and your broker relations and et cetera?
Yeah, until now, our property management has been a pivotal partner for all our deals. They're not actually equity partners, but they've been with us from day one. We're very fortunate to have met our property managers that we can trust, and they do a great job. And it's really a win-win situation. And it's with the expectation that as we grow in our portfolio, that their portfolio of assets under management also grows. So it's a really win-win symbiotic relationship.
Yeah. And that's what it takes in this business, is long-term symbiotic relationships. And somebody that buys into your vision and knows that, has confidence in your ability to scale and grow and wants to scale and grow with you. That's an invaluable partnership right there.
Yeah, whenever we look at a property, they walk it for us. They take pictures, give us their analysis and opinion, and they've really gone above and beyond their call of duty. Yeah,
that's great. So I'm curious about your current portfolio. We're recording this on June 23rd of 2022. And, things are shifting and changing in the market. And, we went from a very healthy, well, some people wouldn't say that, but we went from a very compressed cap rate, low interest, low on debt in the debt market, seller's market, but still a lot of opportunity to do well and get good returns and invest in apartments. And then, about maybe 2 months ago, things really shifted, especially in the debt market with rising interest rates and also inflation. How are you guys planning on kind of weathering whatever we've got coming up here? Are you thinking of selling at all? Are you going to just kind of hold through the storm, or what are your thoughts on that?
It's an interesting topic because it's on everybody's mind.
Right.
And I like to think of it I like to zoom out a little bit, because right now we're looking at 6 and 7% interest rates, but in the big scheme of things, it is still relatively low. I mean, There were times when interest rates were 12%, 15%.
Yeah.
Now, 7% is a lot higher than what it used to be. So we do need to make an adjustment. And it used to be where the cap rate was still higher than the interest rate that people are paying. And there's the arbitrage, right? Where the cap rate might be as low as 4%. But if the interest rate is 3%, there's the 1% arbitrage.
Right.
As the interest rate goes up, I think we just need to be mindful of buying the right assets. Is the cap rate appropriate for the rising interest rates? And how we're adjusting to that is we're focusing more on the fixed long-term loans rather than the short-term bridge loans. So we're looking more into bank debts, agency loans, rather than short-term bridge loans where you're forced to refinance in 3 years in order to make the numbers work. So if the deal pencils out for a fixed rate long-term loan, we feel much more confident about those projects. We also look for projects that will cash flow relatively early in the cycle of the hold, rather than these huge value add projects where something that would be cash flow neutral or cash flow positive on year one.
Yeah. Yeah. And again, like he just hit the nail on the head as far as how to continue to buy in this market, how to continue to operate in this market, and how to underwrite in this market. And, bridge loans are typically variable interest rates, adjustable interest rates. And, they're typically, like he said, due in 3 years, 2 years, something like that, 5 years sometimes. And look, none of us have a crystal ball, and none of us know how this is going to play out with the economy and interest rates, et cetera, inflation. But if you're doing what he just said, which is securing long-term fixed debt and buying properties that either cash flow on day one or cash flow soon after your adjustments in rents and improvements, you should be okay. If you don't have to cash out in the next 3 years, you should be okay. Now, I can't tell the future, right? And neither can Key, but I wish we could, because we'd be very happy. But typically recessions and downturns go for a year to maybe 3 years, sometimes even shorter, like 6 months to a year for a mild recession. But this could be mild, this could be major, but banking on or betting on the 5 to 10 year picture is really how we're underwriting right now. We're planning on holding properties for 5-10 years at least that we're currently purchasing, and we're getting fixed interest rate, and we're buying properties at cash flow, and so that helps me sleep at night, without knowing what's going to happen. And yeah, I mean, that's really like, if you're taking notes, listeners, like write those down. Long-term fixed debt, cash flowing properties, hold for 5 to 10 years kind of thing. Those are your criteria that you want to make sure that your business plan and your underwriting reflects, I would say. That's awesome. So are you guys back to your existing portfolio? Are you just planning on holding for a while on most of your properties?
Right. Yeah. So on a couple of our holdings, we do have a loan that's coming up in 4 years, but we're not making any big moves right now as far as trying to sell any of our properties. We're still in acquisition mode. Right now, we're in contract for one. We have another offer out on a couple of properties, and we're going to continue to acquire. In any market, there are deals to be found.
Right.
And what better asset class to be in than real estate, where the thing I love about real estate is it's a hedge against inflation.
Right.
The rents go up with inflation.
That's right.
But the mortgage payments stay the same.
Yep.
And if that's not a way to, turbocharge one's wealth, I don't know what is.
Yeah. So well said. Hedge against inflation, guys. That's like a massive concept with commercial real estate in general, but especially multifamily, because as Keith said, rents go up with inflation. So it's a hedge against, it's protecting yourself, protecting your capital from losing value and being in a very low interest scenario, like, in your checking or savings account or in a bond or something that yields, much less than the inflation growth. And, like you said, it's something to really get excited about with real estate, because look, cap rates might decompress a little bit, probably will decompress as interest rates go up, which obviously brings the value of properties down based on net operating income. However, your net operating income is going to grow as inflation goes up, because rents are going to go up and expenses will go up as well. But there's sometimes with your expenses, there are some fixed numbers. So, ideally your income goes up much faster than your expenses do. So yeah, that's tremendous. The other thing I wanted to address is you mentioned, Key, that you're seeking debt mostly from banks. For whatever reason, smaller local banks respond to the Fed raising rates. They respond to it slower than, say, agencies do, or CMBS or life insurance companies. The small banks, at least up until now, have been, in the last 2-3 months, really the best rates out there. We were seeing stuff 2 weeks ago still below 5. Now it's kind of right at 5, maybe a little above 5%. But do you work with a mortgage broker to place your debt?
We have our network of mortgage brokers and local banks. So for our Reno deal, we worked with a mortgage broker.
Okay.
To secure the loan. For our Columbus deals, we have very close relationships with some of the local banks, and we were able to secure some really great loans. And I love bank loans because it's a middle ground between agency loan and a bridge loan, where you can get financing for the purchase price as well as CapEx, and still get 5 or 10 year terms with pretty gentle prepayment penalty compared to agency loan. The problem with agency loan is that the prepayment penalty is just prohibitive, where the yield maintenance could be, well north of 7 figures, depending on the size of the loan. And that makes the deal very unflexible as far as, when you can sell, when you can refinance. With bank loans, the prepayment penalty is much smaller. And you can still get financing for CapEx, and because it's based on relationship and personal touch, it's more flexible. Where the bank have more control and influence on how they structure the loan. So by meeting and connecting with local bankers, it's really given us an edge, I believe. Even the latest deal that we have, it came from our banker. And,
Wow.
That's why we value these relationships. Your network is your net worth.
Let me ask you about that, because I love that, by the way. Your network is your net worth. And that is so true. Like, this is such a relational business. It's not, as opposed to being transactional. The long-term relationships in this space are the ones that really pay off in the long term. And that's amazing. You got a deal through your bank. So tell me how we use mortgage brokers for all of our debt so far. Often they will source the bank loans for us. But I've never dealt directly with a bank. How did you establish that relationship? Was it just reaching out kind of thing, or how did that come about?
We flew out to Columbus, made a bunch of meetings, had some coffee, lunch, visited them at the office and say like, hey, I'm Key. This is Dan. We're from California. We'd love to do a deal with you guys. And it's just flying out there and meeting them. I think they appreciate it. They're like, hey, you know what? These guys are serious, and they can put a face to a name. And and we're fortunate enough that we had a couple banks believe in us, and we've grown those relationships since, and it's paid off very well for both of us.
And you just hit on something that we preach on the show. It's been a while since we talked about it, but there's nothing that replaces your boots on the ground in your market. Going to your market, like he said, having coffee, having lunch, shaking hands, meeting face to face, enrolling brokers and banks and lenders in your vision and what you're up to. That is irreplaceable and is worth every penny that you spend on the travel and everything else. We end up in our markets probably 6 times a year in each market. We're in Oklahoma City as well. So, we very frequently will go there. And, even if I'm there for just 2 days or 3 days, those 2-3 days can be the most productive days of the year, really, because ideally you're touring properties, you're driving neighborhoods, you're meeting brokers that have deals, sometimes off-market deals. And you're meeting you're meeting banks and equity sources. So go to your market. If you're managing properties, or if you own properties, not managing properties, but if you're owning properties that are out of state, you have to be prepared to be there and go there. And again, like, nothing replaces that face-to-face contact, I would say.
Yeah.
Yeah.
To your point, we're flying out to Columbus on Monday.
Nice.
We're going to stay there for a week.
Oh, nice. Good for you. Didn't you guys just close a deal in Columbus?
Yeah, we did a couple of weeks ago.
Yeah.
And we have another one under contract. And then we put an offer on another property that we're going to walk when we fly out there.
Beautiful. Nice. I'll be there in July. I'm going out mid-July. So that's exciting. So, let's talk equity for a sec. Tell me about your equity raising, your capital raising game. How do you guys crack that nut, so to speak?
Until now, we've been focusing mostly on our personal network, especially my partner, Dan. He has very wide network of high net worth individuals. He comes from banking background. He was in corporate banks, dealing with large clients. For our deals, we've had some high net worth individuals that partner with us, but we need to also grow out of it and just reach out to people that don't know us yet. Mm-hmm. And by coming out on podcasts like this, by being more active on social media, just networking and building relationships, I believe is how, we can achieve that. So we're in that, phase where we're going to reach beyond our immediate network to just partner with as much people as we can.
do you guys have like I know you've got your website. Do you have like click magnets that guide people to your website, and you have the CRM integration and all that stuff?
We don't yet. We have this website called the R.E.I Workshop, and it's a platform where people can, learn more about us and where we share our journey, some conversations that we have with different people in the industry, and where we, post articles and things like that. And we are using social media to organically grow the platform. And, that's one of our goals this year, to be more involved in the digital marketing, in social media and our website.
Yeah. That's great. It's something we're always working on. And I think raising capital is kind of doing all the things, right? Like, the networking, the online meetup groups, the social media. You and I met through social media, and I saw what you were doing in Columbus, and wanted to reach out and connect, and like you said, your family and friends are great, but you do reach a ceiling there, and you need to be out growing your network. Your network is your net worth, and you need to be out there really growing your net worth and your network and your net worth all the time. Like that's something that you're constantly raising capital, whether you have a deal or not. I think the best position you can put yourself in is to have a deal myself. And that makes capital raising a more like it's something that people can get their heads around when you show them a live deal and how it works and how the returns work and everything else. And so, with you guys having, sounds like 2 deals under contract right now, or one that you're working on with another one in the pipe sort of thing.
Yeah, we have one under contract, and the other one was that we have an LOI out. Yeah.
So, when you have those projects out there that you're raising capital for, it kind of like is a little bit of a snowball effect, where you're having conversations with capital sources and equity sources and high net worth individuals that lead to other conversations through referrals, or you should talk to these guys, or that sort of thing. And so I personally, our growth with our capital raising is when we're actually raising for live deals. And, a lot of times we're kind of under the gun as far as our timing and everything else. So you get out there and you do whatever it takes to raise the capital. I'm a member of a mastermind group, the Tim Bratz Legacy Family. Shout out to Tim. No official affiliation other than I'm a member of his group, but we've accessed some really good capital sources through that. So on the capital raising front, key is we're doing like kind of the same stuff, it sounds like, and that's super exciting. So tell me a little bit about you and Dan and how you guys work together. Like what's your superpower, Key, and what's his superpower, and how do you guys play together?
Yeah, so Dan is actually one of my closest friends. I've known him since junior high. We've known each other for more than 30 years. And as I mentioned to earlier, when I told him about my plans for selling my 3-plex to buy an apartment, he was all in. He's like, all right, I'm in, let's do this. And, we just never looked back since. And I really like our partnership because I feel like we have complementary skills. Yep. And we have synergy where 1 + 1 is more than 2. So Dan, his superpower is raising capital. He's very social, life of the party, the funny guy, right? Just very good at just meeting people, making them laugh. And, so he has the ability to, raise capital. Marketing is also his specialty. What I focus on is acquisition, broker relationship, analysis. I also focus on the lender relationship with the bankers, brokers, and just networking and structuring partnerships.
Yeah.
Because when you meet people in real estate, you never know who's going to be your next buyer, seller, investor, or partner. And so, I like to just reach out to people, other investors, see what they're doing. So that's kind of where I focus on: acquisition, loan sourcing, and structuring partnerships. And if you were to ask me what my superpower is, I would say my ability to make big decisions, systematically making big decisions, is an advantage that I have. And I think it comes from my background, both as a pilot and as a poker player. There's, you have to make big decisions with limited information sometimes. And no two situations are alike. You have to think calmly and make big decisions without all the available information. And one of my favorite sayings is it's by Colin Powell, where he says he abides by the 40-70 rule, where he never makes a decision with less than 40% of the available information, but he also doesn't make decision with more than 70% of the available information. And that could be counterintuitive. Somebody might think, well, don't you want all the available information? Well, if you try to get 100% of the information, by that time, it's usually too late.
Yeah. Somebody
else pulled the trigger. So I think the ability to be decisive and systematically making decisions is very important.
I didn't think of it until you just said it. I didn't think about your role, your career as a pilot and also as a poker player, the crossover into real estate and commercial investing. That's a great crossover. And with being a pilot, you've got a lot of times hundreds of lives in your hand, I would think, and that's a big deal. And like you said, you got to be able to calmly make decisions with limited information if there's a situation that you need to handle. And then, with poker, you're talking about you never have all the information in poker. So you got to make some judgment calls without knowing all the information. I've actually never thought about this or talked about it before, but it's something that, it's something that I would say that's, I don't know if it's a superpower, but it's a skill that I have. I'm willing to make big decisions for our company. I'm the CEO of our company. And if I have to, I'll make the big decision. I prefer to consult with my two partners, Carl and Chelsea. But if I need to, I'll make a unilateral decision on my own and be decisive. It sounds to me like another one of your superpowers is this relationships game. Like, you talk about brokers, investors, partners, banks. Like, it sounds like you're pretty masterful, Key, at forming great relationships.
Tate, I love building relationships because you never know where it's going to lead. And you don't just meet people with transactional agenda. You meet people with an open canvas. You don't know where it's going to lead. They could be your buyer, your seller, your partner, your investor. They could just introduce you to someone. Right. But by adding value, by building relationships, oftentimes it just results in something that's very beneficial for everyone. And that's the beautiful thing about this business. That's what I love about it.
I love it too. I think it's just fantastic. And if you're coming at those relationships from a value add perspective, like if your agenda is how can I serve and help this person that I'm talking to, what resources might I know of that they might need, what experience do I have that I could share with them that might help them, et cetera. Like if you're looking to be a contribution to somebody else's success, that just comes right back. Might not come right back at the moment, but eventually, like he said, you just never know. You never know who your next partner investor is And that's like exciting. And so putting yourselves in rooms with people that are up to big things, whether that's a national conference or a mastermind, or an online meetup group, networking group, like that's where things happen. One of the most fruitful groups that I know of is Brian Briscoe's Friday TGIF meetup. It's at 11 o'clock Mountain Time, so I guess 1 o'clock Eastern and 10 o'clock Pacific. But it's it's a group of people that are doing deals, and they're just high level investors and mostly investors, operators, syndicators. Dude, I've made some key contacts through that group, and things that have turned into big stuff. And not only that, but other people have as well. It's just extremely fruitful activity. It's the $30,000 an hour work that you do. And so, putting yourself in rooms where people are doing bigger things than you is another great way. Key mentioned right off the bat mindset, and how it took a mindset shift for him to get his head around that he could do multifamily himself and buy apartments. And you mentioned your friend Mike that suggested that to you. What a gift he gave you by making that suggestion that you could do apartments. And not only did he say that, but he walked you through how and why, like why scale and why do multifamily. And it was almost like he provided you some mentorship, it sounds like. And that's, I think a lot of people in this space have a similar story where it was one person that told them they could do this, or like in my case, I went to a Real Estate Investor Association meeting, and my friend Adam Adams was presenting on the 5 ways to get into multifamily investing. They do 5 ways to get into apartments. And that was my really first time that somebody looked me in the eye and said, you can do this. And that was the beginning of my mindset shift and getting my head around it. So, like we're here, Key and I are here to tell you listeners that you guys can do this. And Key went through why. Like you don't have to have your own money. You don't have to have your own track record. Those are things that can be leveraged through great partnerships. So, yeah. So Key, great job on that stuff.
Thank you.
Yeah, that's awesome. Well, we're starting to run out of time here, Key. I'll just ask you, obviously Dan's been influential, Mike was influential. Who have been like the key thought leaders, authors, books for you, audiobooks, et cetera, that have like really propelled you along and kind of informed your path?
I'm a big fan of the Stoic philosophy. So Marcus Aurelius is one of my favorite philosophers. I'm also a big fan of a lot of the Navy SEALs out there, like Jocko Willink, David Goggins, and Mark Divine. So I love their books, their thoughts, and Extreme Ownership was, one of the books I really enjoyed.
That's a Jocko book, right?
Yeah.
Jocko's amazing. David Goggins is amazing. Like if you guys want to get in the heads of people that really know what it takes to crush it and to meet adversity and to really overcome your own limitations, like both those guys are studs, and that's a great reference. And while it's not real estate specific, it's specific to success and to personal development and to mindset, like really, digging deep and finding in yourself what it takes to do well and to crush it. So yeah, those are great suggestions. Anything else that you would want to share with, a newer investor, somebody that's trying to crack the code and kind of break into this space?
I think you can be a little intimidating at first, and we mentioned this several times, but it is all about the mindset. If I never met Mike, I would have sold my triplex and I would have bought a fourplex. Nothing wrong with a fourplex, but 60 units is much more exciting. Yeah. And all it took for me was just a shift in mindset. So network with people that are doing bigger things, talk to people, read, and just have an open mind that you're probably capable of a lot more than what you think.
I love that. Yeah, that's gold, guys. That's like hitting the nail on the head. And I couldn't agree more. I think mindset is absolutely foundational in all aspects of this business. And if you don't have that piece in place to a high level, it's going to be a struggle for you. If you do have it in place, things just kind of seem to work better. Things fall into place better. And when you need to dig deep and make big things happen, you have the mindset that you can do it. And, there's that old saying, if you believe you can't, you're right. If you believe you can, I forget. It's whether you believe you can or can't, you're right. Right. Something like that.
Yep.
And, and that's it. That's really what this business comes down to. And the people, the Elon Musk of the world and the big players, the big entrepreneurs in this world, there's the only difference. Well, I'm sure there's other differences, but one main difference between them and everybody else is what they believe to be possible. And that's all between your ears. Like, that word, developing the real estate between your ears is the most important project you'll ever do, I think. So that's great. So Key, this has been a great discussion, a great hour. I've really enjoyed getting to know you better and hearing your story, hearing your wisdom and advice. I really appreciate you being on the show. How do listeners reach out to you and get a hold of you?
The best way would be Facebook or Instagram. On Facebook, I'm Key Lee. On Instagram, I'm Captain Key.
Captain Key.
Yeah, and you also mentioned our website, elevaterei.com.
Yep. And Key, for listeners, Key is spelled K-I, and then Key's last name is Lee, L-E-E. So he is a great follow on social media, and is constantly posting really fun stuff and really interesting stuff and helpful things. So highly recommend that. Keith, thank you so much for being with me today. I really appreciate it. Thanks.
Thank you for having me. I had a great time and I'm looking forward to partner with you.
Yeah, that I couldn't agree more. I'm really excited about this connection with you.
All right.
So listeners, you just listen to an example of two people networking amongst other things. Like Keys and my relationship is richer and there's more trust between us now. And it's because we sat down and we talked at a high level about what we're up to. And we shared authentically about who we are, what we're doing, what our philosophies are on different aspects of the business. And, this is a partnership that waiting to happen kind of thing. And again, that's the mindset, right? Like you can find any piece of the puzzle in this business through partnerships. So figure out your superpower and your resources that you have and fill in the gaps, with partners and employees, team members, if that's what you're up to. But it's kind of whatever it takes in this business, but it's all relational. Couldn't agree more. So good stuff, Keith. Thank you very much. Listeners, thank you for listening to another episode of the Apartment Gurus. And we're just very grateful to have you as a listener. We're always available at investwithgreenlight.com. There's a link there to book a quick meeting with me, 10, 15-minute meeting if you'd like to network and brainstorm your business and mastermind. There's no strings attached. There's no agenda. I just love helping people, and I know Key does too. So you can reach out to either one of us. So thank you again, listeners. Thank you, Key. Appreciate it. And we'll catch you on the next episode of the Apartment Gurus. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.